Hi, everybody. It's Jessica Stone at Stansberry Research, along with Scott Garliss, the editor of the Stansberry Newswire. And Scott, we've all been watching in absolute horror as these oil prices around the world just tank. I mean, we've seen negative oil prices for the first time in history, and yet there's been a huge flight of capital into oil ETFs. What's going on here? Why isn't that driving the price of oil up?
Yeah, really interesting point. What's going on here, it's the way these ETFs are set up.
So you say the way they're set up. What do you mean? What are people getting into that maybe they don't realize they're in?
Sure, well, that's part of it too, but it's what they're investing in. And let's take, for instance, the USO. It is an oil ETF, but what it's investing in, it's probably one of the most pure ones out there. It's investing in futures contracts. And people don't understand that. They're genuinely trying to invest in oil because they think the economy is bottoming. It's going to turn around and get better. The problem is when they're investing close to expiration, this ETF is shorting the front month, which is the closest futures contract in oil, and it's actually selling oil in the process. So they think they're buying oil, but what they're really doing is putting pressure on the price of oil.
They're actually forcing the price of oil to go down when they maybe are actually intending for it to go up.
Exactly. They are buying it. They're genuinely buying it because they think and they want it to go higher. But right now you also have another interesting dynamic with all the demand that's disappeared because of the lockdowns on economies all over the world with coronavirus. So we've basically seen a third of global oil demand disappear. So storage is running out. And because of that, the price of oil is dropping. And if you're a trader of oil futures contracts, you don't want to get stuck with a contract because barrels of oil will show up in your front yard, basically. And if you don't have a place to store them because storage is running out, it's bad news.
Right. So you mentioned USO, and I just read that that fund in particular says it won't create any more new shares. I'm wondering if that'll be enough to stop the slide in oil prices, especially if other ETFs do the same thing.
Well, going into that expiration that ended yesterday, yeah, potentially, because they can't create new shares, they can't accept new money, they can't sell oil. But going forward, there's a dynamic here that's a problem that needs to be fixed. Regulators need to talk to the people who created this ETF and have it done in a better way.
So Scott, then how can people avoid getting into this situation where they're actually intending to do one thing, but the impact of their investment is having the opposite effect? Because honestly, it's understandable that that's not probably what they wanted to happen when they got into these ETFs.
100%. And again, what it all comes back to is understanding the investment. It's easy to look at an ETF and say, this is what it's meant to do. I'm putting money to work. But sometimes you have to go a little bit further below the surface and look at what it is. Like, say, for instance, there are vegan ETFs, green ETFs out there, but all they're invested in is technology companies. It has nothing to do with vegan products. But again, it goes back to understand where you're putting your money to work.
It's a really good example because just like this example, I would never guess that a vegan ETF was not invested in like fake meat, for example. So thanks, Scott, for that excellent metaphor that will be ringing in our ears. And if you would like to see more content just like this, please subscribe to our YouTube channel. You can also follow us on Facebook, Instagram, or Twitter. That's all for now. Thanks for watching.